All right, welcome to the daily market recap for Monday, September 29th. In this video, we'll be taking a look at the action today of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, we really could not have asked for better price action over the last 2.5 days. Starting on September 23rd, we had open near the high, close near the low, our first red day in quite a while. Follow through the next day. And then on day three, we started with a gap down, had pretty aggressive selling in the morning. But from that point, after the undercut and reclaim of the support gap, we've just been continuing to see higher highs, higher lows. And today we saw a gap up on the NASDAQ, back over the 5-day moving average. We did close a little bit weaker in the range, but still up 0.47%. Even if we take a couple days pausing right around this area, maybe pull back into the 10-day moving average, the gap zone from today, all perfectly healthy action overall. The S&P 500 also had a little gap up today, also reclaimed the 5-day moving average, up 0.27%, closed about 50% of the daily range. Not far away from all-time highs. The growth stocks of the Russell 2000, that's the ticker IWO, good undercut and reclaim the support gap, the 20-day moving average on Thursday, followed through on Friday. And then today we did open on the high of the day, closed near the low, back right at the 5-day moving average, but still up 0.2%, 0.16%. Really not doing anything wrong there. More likely than not, we'll get a pullback and potentially a higher low. I don't really see us just like ripping into new highs because there's a little bit of overhead trading here. So we'll see how that goes day to day. But then ARKK, which is another kind of risk on, risk off indicator that I use, is flashing risk on for sure because we had another gap up, strong close at a new 52-week high, up another 3.65% on the day. And really, you could not have asked for like a better base from the middle part of July until the breakout kind of early half of September. Quick pullback to the 20-day moving average. First test of the 20-day is usually a good risk reward spot. And in a bull market like we're in right now, in a risk on environment like we're in right now, those pullbacks to the key moving average the first time after you make new highs, they're more than likely going to get supported. And we're seeing that price action with ARKK. Then finally, taking a look at IBIT as a way to track Bitcoin. Great strength today. This is a group that was showing relative weakness over the past couple days, maybe a week and a half or so. Some good strength today, up 4.9%, back through the 5 to 10, the 20-day moving average, just below the 50-day. And hopefully now this is a higher low in the structure. We can rally up, test the previous highs here from September 18th, and then we'll go from there. But really, until we either take out this high or take out this low, we're just in a range-bound kind of basing formation. Getting into the liquid leaders, I did have to take off CLS. CLS not doing anything wrong. Higher highs, higher lows today, closed up 0.9% with a little gap for testing under that 20-day EMA. So we're in a strong market. Well, one sign that we're in a strong market is I'm taking leaders off that aren't even closing under their 20-day moving average just because we have so many strong stocks to go over. And I went with HOOD, Robinhood, to replace it because we had a awesome day today in Robinhood. Gap up after a 10-day moving average test the last 2 days, Thursday and Friday. Gapped up, opened on the low, closed right near the high of the day on a big uptick in volume. Just perfect price action here. Definitely earned its spot back on the leaders list. APP basically going vertical at this point, back-to-back gap ups and strong moves. Thursday, we had the test of the 10-day moving average, while the S&P 500 and the NASDAQ tested the 20-day EMA. So when you're pulling back to a shorter duration moving average, that's a good sign of relative strength. And then action on Friday up 4.7%. Today, gap up, open near the low, close up 6.4%. We did close a little bit weaker in the range compared to some of the indexes. But after 3 days like this, some profit taking is perfectly healthy. This could pull back into the 5 day, kind of a breakout retest, still be fine. Come into the 10 day, like the secondary gap zone, still be fine. I wouldn't be trying to start a new position up here after the move that we just had from really from earnings from 400 to 700, 20-ish percent, 75% move. Just phenomenal price action there. BE, this was going parabolic, and then we had kind of a 2.5 day pullback, 1 day down 10%, the next day down another 10%. And then we opened with a pretty large gap down, undercut and reclaimed the support gap. And from there, we bounced, closed well on Thursday, finishing the day only down 0.7%. Higher highs, higher lows on Friday, up 2.4%. And then today, gap up, reclaim of the 5 and the 10-day moving average, up another 4.8%. Alibaba, new 52-week high today. Cover this every video, but the breakout in China is something that you need to be keeping track of. 3.5 year base breakout, did an offering, got soaked up immediately, and then just super clean price action over the 5 day moving average. Any consolidation has only consolidated into the 5 day, not even the 10 day. So you're seeing persistent buying on this stock all the way into new highs here, up another 4.7%. LEU, nice consolidation day, lower volume, still over the 5 day moving average and finishing up 3.5%. Really strong price action there. NBIS, little gap up, another close over the 5 day, up 2.3%. Love the consolidation here. A couple more days tightening up, and then this could be ready for another move higher. KTOS, another gap up after Thursdays. We did close a little bit lower in the range, but up 2.1%, so can't really complain there. New all-time high for KTOS. And then Tesla rallied up, tested a overhead resistance gap from what was that, December 26th to the 27th, right before all-time highs, and found some sellers there. Still up 0.6% on the day, but maybe needs a higher low pullback, maybe the 5 or the 10-day moving average before we take out those all-time highs. And then lastly, Google, a little bit of weakness today, down 1%. Uppercut and failed at the resistance gap at the 5 and 10-day moving averages, and then closes within that support gap. How we handle the support gap will be pretty telling for Google. I love how we handled it on Thursday. Perfect undercut and reclaim of that support gap low. Maybe another test of that area and that 20-day moving average would be a good risk reward spot. Again, stocks that make new highs, then pull back to the 20-day for the first time, especially when that lines up with a support gap in a bull market like we're in, is usually a good risk reward spot. Getting into some of the industry ETFs, and the theme today was cannabis. MSOS up 28.2%. Of course, it is after it stopped me out on Thursday. It went a little bit lower, and then we had a couple Trump tweets about it, I guess. Massive volume coming in. Tried to play it in the morning, and I got stopped out on this lower wick, and then I lost internet. One of the more frustrating trading days of my career because I've been on this theme. I managed my risk accordingly. I got stopped out, and then just some computer problems this morning. Just really frustrating. But I'm glad that it did kind of pop, close really well. If this is the actually beginning of getting cannabis rescheduled, you're just getting the 200-day moving average flat now. There's going to be so much room to the upside. I'm not too worried about not getting properly positioned just yet. Blockchain ETF, great strength with Bitcoin and Ethereum bouncing right off that 20-day moving average. Gap up, reclaiming the 5 and the 10-day, closed right near all-time highs. KWeb, the Chinese internet ETF. This is the one that we kind of cover. 3.5 year base breakout 2.5 weeks ago, hovering over that 5 week moving average. Nice gap up today. Some consolidation here would be fine, but it just goes. It just goes. When you break out of a base this big, you're gonna typically move up a little bit more than you expect. XBI, biotech ETF, continues to be the easiest trade to hold on my end. I have a position in LABU, which is the triple leverage version of this ETF. Just higher highs, higher lows the entire way, consolidates into the 10-day moving average, acts really well. And you'd expect a little bit more volatility with the 200-day like just going flat. but it's been a super easy trade to hold. Another day up 1.5%. So LABU was up about 3.5 or 4.5%. Gold miners, new all-time high, closed a little bit weaker, but still getting extended in the short term, like basically going straight up at this point. Solar stocks, really like the action here. Undercut the 5 and the 10-day moving averages on Friday, got into the support gap after the undercut Thursday, and then gapped up today. Very quiet day, even though it was on an uptick in volume, but quiet day right below all-time highs. This, or not all-time highs, 52-week highs. This looks ready to get going again. Another group that I want to cover, NLR, nuclear and uranium stocks. So kind of two themes put together. Beautiful price action, beautiful volume contraction right at the 5-day moving average. After Thursday's gap down, got supported at the 10-day. Couldn't ask for better action there. And then one kind of weakness today was the gap down on XLE, the energy ETF. This had a awesome week last week, and one that the 200-day is just kind of flattening out now. So you should expect a lot of volatility. Shouldn't be trying to buy like oil and gas names on strength because of that declining or flattening 200-day moving average. Look for undercut and reclaims as entry points. So you got the 20-day moving average in this gap zone right at 89.18 as a potential higher low in that uptrend. Now to the long setups, we'll go most liquid to least liquid. First one is Open Door. And I know I had this on the short watch list on Friday, and it did trigger. It broke through yesterday's low, was down 7% today. And I know that doesn't even look like a lot because this chart has been a monster up from 52 cents to about 10.50. I really thought when it would break yesterday's low, it would accelerate lower, but the market's just too strong for that at this point. Now, this can still continue to go lower. And if you were short it on that break, I would stick with that trade. But because we didn't accelerate lower, we didn't lose the 20-day moving average, and the volume on today's sell off was so light, I still think this is kind of like a coin flip trade, but a coin flip trade that because it moves so drastically, you're going to be able to skew the risk reward in your favor by using a manageable stop. If this breaks through today's high, like gap up, opening range break, that's buyable versus today's low. If we take out today's low, that's just more confirmation that this is a lower high. We do have 3 unfilled gap downs in a row off that $10 uppercut and failure. So it wouldn't surprise me whichever direction that this goes. For me, it's kind of a litmus test for the market and for the market momentum. If we break to the upside, market momentum is still strong. If we break to the downside, there's one kind of data point that says that momentum is starting to dry up. Another good kind of indicator of that is going to be RKLB. This is sitting right on the 50-day moving average, a third higher low on the 50-day moving average. I don't have this one on the long or the short watch list, but there was some news that came out. I need to dig into it after this video, but we have a nice clean pivot, like right at the 10-day moving average here. If the news is good and we break out of this zone, and we actually hold that move, there's a data point that momentum is still in the market. We want to continue to play on the long side, be aggressive there. But if this good news gets sold off, maybe we uppercut and fail at this gap zone, we take out today's low in the 50-day moving average, that would be another sign that momentum is weakening in the market. Back to the long setups, SoFi, really just clean price action, pulling back to the 20-day moving average. Just looking for an undercut and reclaim of the support gap below the 20-day. So anyone that uses the 5-day got stopped out, the 10-day got stopped out. I want people to get shaken out of the 20-day before I get in this name. And this would just be a breakout retest, really. So 26.55 is the spot to watch for that undercut and reclaim of the support gap below. SOUN, beautiful base here. Kind of reminds me of like RGTI, IONQ, those names. Just continue to build higher low, higher low, higher low, higher low, higher low, and potentially another higher low. Two different ways to play this. Well, first, look at the volume on this pullback. Very, very little, very controlled as it comes into a key moving average and kind of a breakout retest or a higher low retest. Two different ways to play this. If we have strength in the morning, a gap up and then a take out of today's high would be buyable versus today's low. Or what I would kind of prefer is a shakeout of the 20-day moving average at that 1530-ish area. It'd also be a shakeout of kind of the breakout retest. Reclaim today's low would be the entry. Stop would be whatever the low of the day is. Baidu, going back to that Chinese theme, is one of the cleaner Chinese charts in the market. Didn't really get going. Early on, we had like FUTU, TME, and then BABA started things off. But really awesome move from earnings from 86 up to 140. Rough math, that's maybe like 70 to 80% gain in a short period of time. And from then, we did not sell off. We had a quick pullback to the 10-day moving average, bounced there, and have now gotten tight right on that 5-day moving average. I would rather play this on a shakeout because it still does feel like it needs a little bit more time to consolidate for me. So a shakeout of the 10-day moving average of that 130 spot and reclaim would be buyable versus the low from September 23rd. Or just through today's high, and then you want to play that momentum burst, then you would want to keep your stop at like 130, the 10-day moving average. Neo, another Chinese name. This almost triggered the entry today for me. Really just clean higher lows, higher lows, higher lows. 200-day in an uptrend, 50-day in a nice clean uptrend. I was looking for this to sell off a little bit more so it could come down to the 20-day to these lows. That's really where my spot still is on this, where I would feel more comfortable sizing up in a real way. But through today's high is also a buy spot if you want to play that momentum. Stop would be today's low. I would just be doing that with a little bit smaller size because Chinese stocks, like they still could go sideways a little bit more, be completely fine, even pull back a little bit more. So I don't want to buy too much size up top, get shaken out, then sour on the theme. I really want to stick with this theme and be mentally like okay with some wiggles, some shakeouts, stuff like that. Next, we have First Solar, FSLR, another nice gap up today. Uppercut and failed at the resistance gap. And whenever we have a resistance gap, I don't want to buy that on strength because we have evidence that there are sellers at this area. So I want to buy on a shakeout. I know there's today's gap in the 5-day moving average. That's a little too close. I don't think that's like shaking anyone out, really. Looking for a pullback undercut of the 10-day and the support gap at 215.50 as the spot there. Another Chinese equity, FUTU, was really like the first stock to get on my radar for the theme because it made over 100% move from 71 up to almost $200. We zoom out just below all-time highs, one of the few stocks that are right at all-time highs in that theme. And it was the first to make it right near highs, first to pull back to the 50-day moving average. Nice moves on, what was that, Tuesday, Wednesday of last week? No, Wednesday, Thursday of last week. Little pullback on Friday. Gap up and a little sell-off today on lower volume. Just looking for a break through today's high as like a higher low breakout through that 179-ish area as the entry. Stop would be today's low and the 50-day moving average. Next, we have LAC. This was on the watch list coming into the day. I was watching to see if it would respond well to the high volume close, that $6 area. Did not. It kind of cut right through that, got to the 5-day, and then bounced and closed well. One thing to note with these like super powerful moves, like this was up 95%, and then the next day up 22% on just overwhelming volume. And then when it pulls back, you can see the volume just drying up dramatically while we still close over the 5-day moving average. Whenever you have red candle closes over the 5-day moving average after a volume explosion like we saw with LAC, to me, that's just consolidation, some profit taking for shorter term traders. I'm looking for a gap up, opening range break, maybe a retake of that $6 HVC level as the entry. And then I would keep my stop at either the low of the day, that's a little wide, or the low of tomorrow, whatever that would be. But there's tons of power potential in this. We're in a momentum market. Those are the type of names that can really move your account. You still have to manage risk with the stop, though. HUT had an awesome move into highs, pulled back, first test the 20-day moving average. Nice bounce, gap up, strong action today. Just looking for a higher low undercut of that support or that gap zone of that 20-day moving average, right around 33.16 as the entry. NXT, another solar stock, IPO as well, making new all-time highs today. Not many solar stocks, well, no solar stocks can say that. Looking for a pullback into the 10-day moving average on this one. There is the gap zone at 73. I have alerts around that area. I would feel a little uncomfortable buying at that point unless like all the solar stocks are pulling back really aggressively, and in which case this is showing some relative strength on that small pullback. But a couple more days, 10-day catches up to that zone, and that's viable for me. AAOI, this is a name that I've been very patient on. Haven't traded it just yet, and I think it's almost ready. It's a name that when it moves very aggressively. We went from $6 up to $43 in just a couple months. Then we put in this big base, higher low, potentially another higher low on the 50-day moving average. Another name that the 200-day is sloping down. So you have to expect volatility and you don't want to buy on strength. You want to buy on weakness. We've had some weakness coming off the top here. Now we've had that consolidation. Break through today's high is the entry. Stop at either the 50-day moving average. That would be about a 4% stop, which is fine if you size it properly, or like the lows 25, 40 or so if you want to size it up a little bit more, take more risk on that you're just going to get a shakeout before it's ready to go. But I like the response on the 50-day moving average and two super quiet volume days while the market's been really hot. To me, it's not the worst thing. Like this could be a bear flag that you break down on, in which case you'll get stopped on the trade, which is part of trading. Um, But now I think everyone's kind of moved off this name because it came into the resistance gap and really hasn't responded in the last 2 days. And those are the names that I want to play. Stocks that have power potential that people have forgotten that I can sneak into. The last two are more like performance boosting trades. AMPX is the first one. Big move from $2.50 up to $9. Beautiful flag into the 50-day moving average. Secondary move from 7 up to 12. Now pulling back into the support gap and the 10-day moving average. Almost undercut and reclaimed it today. I was watching that spot, didn't quite get positioned. But looking at that area, that 1039 spot for an undercut and reclaim, high or low overall in the pullback as the entry, stop would be the low from September 25th. And last, WBTN, another high volume mover on August 13th, reported earnings up 81%, closed pretty well on just overwhelming volume. From there, we flagged into the 20-day moving average and another huge gap up on volume, up 39%. Kind of stalled around highs, pulled back into the 10-day, and now look at how tight volume is, how tight price action is. This is one you could trade to the long or the short side, whichever way you prefer, because you're going to be able to manage your risk relatively tightly. Through today's high, stop at yesterday's low, the 10-day moving average, or through today's low is your short, stop at the highs of the last 3 days. $20 is your stop. So it's very similar to Open and Rocket Lab, kind of a coin flip trade. And you can manage your risk really tight. I don't really care which direction you trade it in. Getting to the short setups, we have Meta. Another day with some relative weakness down. What was it? I guess it was flat today, but a third day under the 50-day moving average. Because the 50-day is still in an uptrend and the 200-day is in an uptrend, I don't want to short it on weakness. I want to short it on an uppercut and failure. So the spot to me is an uppercut of the 10, the 20, and this gap zone right around 760 as the entry. And then I would put my stop at the HBC from earnings. What would that be? 773. GEV, we've seen a bunch of energy names continue to rip higher and higher and higher. And this is just not participating in that move under all the key moving averages, under the closing price from their earnings gap up. There's a lot of relative weakness here the last 3 days. It did come on lower volume, so maybe this is just like a higher low overall, and then we can get going. But again, 50-day is an uptrend, 200-day is an uptrend. It's still a hot theme, so I don't want to short it on weakness. I want to short it on strength where I can keep my risk really tight and have all the shorts get stopped out before I step into it. Through the HVC, through the 50-day moving average, and the gap zone would be the entry. Stop would be the previous, I guess, lower high, 648.40. SMR, speaking of weakness in energy names, OKLO, LEU, the leaders out of nuclear for sure. SMR had a nice catch up trade, got into the resistance gap, weakness, gap down, fell through the 50-day, fell through the 20-day. Today, uppercut and failed at that 50-day, at that resistance gap on larger volume. Still finished up 0.5%, but some like closing weakness. Another test of that gap zone, another test of $40 and the 50-day moving average would be the spot that I would try and play, just with a stop at like 42.40, the previous high here. ARM, one of the weaker semiconductor names. We had this on our radar. I never shorted this, didn't get positioned. Under the 50-day moving average, just looking for an uppercut and fail of the 50-day of that 145-ish area. And then my stop would be above the previous resistance gap here at 147. So a very, very tight risk trade. NEGG, this got started breaking down today. What was it? Down 7.2%. Right at the end of the day, too. I don't tend to trade, like, usually I trade the first 90 minutes and that's it. So I did not take this trade later in the day. Did break through yesterday's low or Friday's low, closed at the low of the day. Just looking for a little gap up, green to red move as the entry. Stop would be today's high. Geo, this has been in a downtrend for quite a while now, under a declining 200-day moving average. 50 days is in a clean downtrend. Had one day gapping up on September 11th, immediately sold off with a gap down the next day, lost the 5, the 10, the 20-day moving average, and closed weak today. Just looking for a break through today's low, stop at the 20-day EMA there. Root Insurance, very similar setup, has been in a downtrend. 200-day is now going flat, starting to roll over. We had this huge volume breakdown on earnings, down 26%. Had a couple weeks where it bounced back to the 50-day, but a lower high overall at the 50-day. Today, we uppercut and failed at the 5-day at the resistance gap and closed weak. Just looking for either an uppercut and fail at that 93.40 area to manage risk against the 20-day, or through today's low, stop at today's high. And finally, QMCO. This is like a fake quantum company. We saw IONQ with a little bit of weakness today, down, what was that, 4.5%. QUBT, a weaker name, down 6.55%, losing the 10-day moving average. Then QMCO had a nice move from $6 up to $12 when the quantum names were going nuts. Has already given up half that move, came back to the 20-day moving average. Nice bounce from that today, but just looking for an uppercut and fail of the resistance gap at that 1016 area. Would try to short as it's coming back through $10 and then keep the stop at whatever the high of the day is. That's going to be the daily market recap for Monday, September 29th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.